All right. I hope you all are having a great weekend. Look forward to doing another market update. This one is really important. I've had a chance to reflect on a few things. I've got a few changes to make, a few updates to make in terms of my short-term forecast. And again, just as a reminder, I'm not a financial advisor. Don't take this as financial advice, guys and girls. I am just doing my best to project what I believe is going to happen. I do not know what's going to happen. Nobody does. The market ultimately decides. And so I'm doing my best to visualize and transfer that visualization in chart form as I post on Twitter, as I post these videos. We most certainly have had a good run over the last 2 months and have forecasted a lot of these moves. But for those of you that haven't been following me for a long time, I also have gotten some things wrong, right? We all do. Nobody's perfect. Anyone on Twitter that's going to claim they're calling every move and ticking the bottom and selling the top is most likely disingenuous. It's just impossible. It's impossible. Those that win in these markets are those that buy when something is very depressed and sit on their hands and don't do anything. The market is much smarter than myself and 99% of the folks that are pretending to trade in and out of these things. That's the best advice I can give in terms of something you have a lot of conviction in, is don't do anything. don't do anything, especially when we have the type of volatility that we're having right now. That being said, now let me go into the purpose of this video. So the purpose of this video is twofold. Number one, my short-term projections have changed a little bit, okay? Bad news for the bears, it's not changed in your favor. My intermediate long-term projection for this cycle, which really isn't long-term, for those of you that follow me on Twitter, I had this cycle concluding within about 3 months, give or take. And so today's video is to, number one, kind of go through a couple of those key changes that I've made to the short term and why. 2 high time frame charts, low time frame speculation, miners versus Bitcoin, MicroStrategy, and then we're going to wrap it up. We're going to wrap up shop. So let me get into it. So first off, what I'm hearing a lot of and I'm seeing a lot of is a lot of the same first target in that $48,000 to $50,000 range, and the market is then going to pull back significantly. And that has, and I've had my short-term target to be in that low 50 range prior to any substantial correction and then resumption higher. I think I'm wrong. I think I'm wrong with that. I think, and I'm going to get into why. I think that the market is, headed towards all-time highs the next macro move, and I'm going to get into the reasoning why prior to substantial correction and then resumption. And part of the reason I do have to admit is this consensus view, this $48,000, $50,000 range kind of being consensus even amongst some of the bulls, and I don't like being in the consensus camp. But furthermore, that's not the only thing that's going to inform or has informed why I've kind of made this key decision. I've looked at a couple technicals. I'm looking at a chart right now, the Coinbase weekly chart, that I'm going to get into, that is informing, again, why I'm making this change. And that's what I'm seeking to explain to you all today. So I hope you enjoy. And here we go. So as you've all seen me post this chart since I started doing videos in the summer, I'm not going to belabor this, right? In my opinion, we have just seen a very unique cycle from one respect, and that is a cycle that people think ended, right, when Bitcoin hit an all-time high in November 2021, a cycle that people think has just started in this bull market, this bull leg, but the market claiming that this is a new bull market that gets kicked off and then post-halvening goes parabolic. Whereas I've been contending this is a tale of two massive accumulation events within the context of a singular bull market that began in late December, early January 2019. And what's unique, what is unique about this cycle are these two massive accumulation events. And again, what I've been contending is the most powerful force within the impulse that we saw back in the fall of 2020 through the spring of 2021 is the accumulation event that preceded it. And this type of accumulation you don't see very often on the high time frame with Bitcoin, especially when they're marked by massive spring events at cycle inflection points. And what do I mean by that? Well, we had a wave 2 ABC correction that marked this spring event. That's a cycle inflection point when everyone thought during COVID it was over. That also marked and gave away this accumulation event as it was unfolding. And so the price action that followed this massive accumulation event had too much power in it, such that traders, folks looking for, where is this next pullback? Where is this retest? Where's all this volatility along the way? To the downside, there was most certainly volatility, but it was to the upside. That was predetermined in the price action, in my opinion, that had preceded it. Okay, and what does that just mean? That means that sellers were exhausted. Sellers had given up their coins. Accumulators had soaked up that demand. Therefore, the market simply had to mark up in order to induce those that accumulated to distribute their coins. And so what we have going on today is very similar. And as you've all heard since I've been posting this chart over the summer, we're looking at a very same market dynamic here, where a massive accumulation event has already taken place. And what does that mean? That means that those that were looking to, willing to, not confident in their long-term thesis on Bitcoin had sold, and they had a long time to sell. And those that were confident in the long-term thesis, and we're not talking about, yeah, there's traders in here, right? But what I'm talking about is what leads to a massive expansion is once all the traders are washed out, right? And we saw that. We saw that here. We saw this in the sign of strength region, where lots of leveraged traders just got chopped up in this region, chopped up in this region, chopped up in this region, but the market would not break its accumulation zone. And that's the mark of a true accumulation zone, and that's the mark of a true sign of strength region. And so once those sellers, and what do I mean by these sellers? The entities that attempt to gain as much liquidity from the market as possible have to have ammo, and they have to have coins. And that's how they can chop traders up, wash out the longs, wash out the shorts. But at some point, you don't have unlimited ammo. And once the folks are done accumulating, once the sellers that are looking to soak up as much liquidity have used up most, or if not all, of their ammo, the market enters a section of price discovery to induce this cohort, okay? To induce this cohort, to induce the cohort that had purchased far back, far long ago into selling. And that's what price discovery is. And that's the mechanism at play here, in my opinion. And so let's look at a couple other things here. Okay, I'm going to get rid of this chart, and we are just going to look at structurally structurally what of importance is going on. And a lot of things are important, are going on. let me tell you. Let's just go back to 2020 and highlight for a second a very important structural area of the market, all-time high. And what Bitcoin did coming out of this accumulation range, accumulation spring, accumulation SOS, breaks out, and then it consolidates in a very important zone. And that was this all-time high zone, okay? And it consolidated there for a few weeks prior to resumption. And so what do we have going on today? Do we have any important zones? Well, we do, and I highlighted it on my video. I believe I did a video last week. And that zone is what, folks? Hang on. Yeah, I'm drinking a Ghost, just in case you're wondering. These things taste like Sour Patch Kids. That is not an endorsement. I am not paid by Ghost. All right. Where are we going here? So here was the area, the level that we were contending with over the last few weeks, and why I claim that area was not only critical but was understandable. We were seeing some consolidation and a fight, so to speak. And why? Well, this area marked first correction and then busted through all-time high. This area marked couldn't hold it, busted through it, tried to negotiate in it, stayed below, broke back out, and then all-time high in a correction. This area provided support, then we breached it, got into it, faked out, and then marked the beginning of this massive correction that we saw. So this area is of significant importance, has been of significant importance over the last couple years, and not surprisingly, we saw vertical accumulation. That's really bullish. We didn't see a rejection. We didn't see a pop up and then a down and a failure. We saw vertical accumulation within that area, and now we broke out of it. And so this to me looks very similar to that, okay? Vertical accumulation. What happened after vertical accumulation the last time? We went on 1, 2, 3, 4 weeks. And let me do percentage. And from that point, another 120%, okay? Now, the past does not guarantee what's going to happen in the future. So this is not a guarantee that that's going to happen here. I am just looking for a confluence, and I see a region that was very important that was consolidated in. I see a region that was very important here that was consolidated in. And so I do not think the market, I do not think this setup, with everything I just said, the setup leads to 40, 52, and then coming back down, let's test 40 again. I just don't, that does not look like how the structure is going to play out, in my opinion. Okay, next chart is my updated count. And I've updated my cycle count, and this is even updated from what I posted, I think, a few days ago. And why did I update my count? Well, if I'm looking at this next macro move taking us to what I believe is all-time high, I think that's this next move, $68,000, $72,000 range, then my counts were off. I had one terminating around low 50s, and that's just too large of a one. That's just too large of a one, proportionate to where 3 was going to terminate. It's too large for me to be comfortable with, especially when with Bitcoin, traditionally, wave 3 is typically the most powerful wave, whether it's a minor wave or a major wave or a cycle wave. Wave 3s are typically the most powerful. And so is there anything that can, is there any evidence that I have for marking this one back in early October? Well, there is. And again, show me the charts, I'll tell you the news. There was some news catalyst that marked that one. And if you'll recall, going back to the beginning of October, I believe it was that Monday where it was that fake report that the SEC was had approved the spot ETFs and price. We had that wick into the low 30s, and then price retraced all the way back, I believe, that day, but stayed above where it started that day. Stayed above where it started, so that was a sign of strength. Very similar price action as this minor one started here, okay? And similar, how so? Well, look at the RSI on the weekly, and I've got the moving average up, which I don't always have. And if you look at this moving average, that minor one, bumped up against it, came back prior to breaking out. Here we have this minor one, and the moving average bumped up, the weekly RSI bumped up against it, came back prior to really taking off through it and making its run through overbought 70 region. So that's the logic behind it, folks. That is the logic behind it. And this is my updated count. Now let's talk about where I see Bitcoin heading. And let me clean this up so it's clear. I like larger images for you all, because I realize sometimes you're looking at these images on a phone. So let me really zoom in. And attempt to provide you with my with what I think that the roadmap's going to be. And folks, I realize this is very aggressive, but this is my minimum expectation. So from here, I believe we run into all-time highs through the end of the year, at which point a normal correction into even the mid 50s would be healthy prior to a move into $115,000, $120,000. Coincidentally or not coincidentally, where I have this 4 correction is right in early January, right when the spot ETF deadline is coming up. I don't know if that's going to be the catalyst. That's not 100% guaranteed, although a lot of signs are pointing towards the SEC working with these issuers. The charts are telling me there's an induction type of event. There's a big catalyst, and typically you'd like to see these catalysts during corrective moves that justify the initiation of major moves. And this 4 to 5, so 50, 60, 55,000 to $115,000 move within a couple weeks. That's a double. We've seen that action before, rarely, but it's happened. At the end of 2017, the price of Bitcoin doubled in 2 weeks. That was at the end of the bull market. Doesn't happen very often. And that's what I'm contending is going on right here. I believe we're at the end of this bull market. And so this is a fairly unprecedented move. And it lines up with the catalysts that are potentially on the horizon. And so from there, I could see a nice retrace back to the 70 level prior to one final blow off into the $200,000 range and above. Would not surprise me. Now, on a personal note, again, I'm not a financial advisor. I'm just letting you know my viewpoint on profit taking when it comes to derivative exposure, anything exposure. My viewpoint on that is, that range right there. that range starting at starting even in the 48s all the way up to north of 100. The riskiest things in my portfolio will get sold first. It's all about a curve of risk, right? So I do have some options. Those get sold first, in the 48 to 60, 70, $100,000 range. And then miners and such towards the top of this wave 3. I'll always hold some spot BTC, but that's kind of the way I'm approaching it. Okay. Next. Just apologize if this is a long video, folks. It's just really important stuff. Next is the updated low time frame cycle count of this impulse, of this third impulse. Okay. And you all have seen me post this chart for weeks now as I've been trying to navigate what I think is going on low time frame. Have been pretty accurate so far, I think, in many respects. So let's dive into it. So if my assumption is 1, 2 are already in, then this is my updated count. And now I'm going to zoom in. I'm going to zoom into where we are right now. And again, the assumption now is that this fifth wave of the minor fifth of 3 takes us to the all-time high level. So that's the lens at which I'm looking at this in. And folks, I realize that is aggressive. But this price action is speaking to me. It really is. It's speaking to me. Where we had a leverage washout last night and we're at $43,824. You've got bids being stacked up. Incredible Crypto posts a lot of this stuff. I don't tend to get into those things because I don't think I have an edge. Because if everyone can see it, then I don't think there's an edge. That being said, folks like Credible Crypto, I think the way he interprets the data provides a unique edge, and he's a great follow, obviously. But just I don't believe I have that edge, if I'm saying that right. Anyway, so he noted some of these spot bids in the order books. And again, with the order books, I'm like contradicting myself. That can be manipulated as well, right? We've seen in the past these huge sell walls, and that can induce the market into thinking, oh, you better sell because they're selling at this level and the price is going to dump, and then they pull the orders. I mean, so take that for what it's worth, but people bidding at these levels, I don't think are retail. I don't know anyone that's bidding 300 BTC at 43,500. Do you? So these are folks with a lot of capital, and what are they doing? In my opinion, what they're doing is they're doing what smart investors do. And this is not saying you should buy Bitcoin here, right? This is just a commentary on what smart investors do during waves of momentum. They find assets with strong momentum and they accumulate them in uptrends on dips. And sometimes you get big dips, sometimes you get small dips. But when you get leverage washed out and price just keeps hanging around here at yearly highs, price action is speaking to you. And so, sorry that I digress. Let's get back into this price action on the low time frame and kind of give you my thoughts and updates. So I posted after we hit this minor 5 that a possibility of a double 3 correction, a WXY, was in play. I think that's terminated. I really do. I could be wrong, and we could be working on an expanded flat type correction. And what's an expanded flat type correction? Well, you've got A, and then B goes higher, and then C retraces lower, and then it takes off. Okay, so that's still in the cards. Or we could have made this WXY, and we made 1, 2, but really for this 2 to be in right now, it calls for a fairly impulsive move very, very soon. So I'd like to see in the next day or two us to really start moving and to confirm that. And so that my bias remains with that count right now, that we have terminated this correction, and we're in the process of making our next move to the low 50s this week. That's what this count calls for. This count calls for, if 2 is in, and I'm not a mind reader, I don't know what's going to happen, but if 2 is in, a mind reader, like the market has a mind, I'm not a fortune teller, that's what I wanted to say, then we should be making a fairly substantial move up to the low 50s, followed by some consolidation. And this is that critical point, and this would make a lot of sense in my mind, where folks are thinking that 48, and then it's going to dump back down to 40 or mid 30 targets. I'm even seeing I would expect to see it kind of blast past all those targets, come back to that 48 region, maybe breach it, right? And then so the bears are like, yeah, I told you, right? Maybe breach it, 46s, and then just a sharp recovery out. Wouldn't shock me. Again, I don't know what's going to happen. I'm just projecting my thoughts literally in real time. That's what you all are witnessing here, me projecting my thoughts in real time. As you all have seen, as I update these charts, I have to make adjustments because that's not going to follow this path tick by tick. So far on this count, the waves have been fairly accurate. The timing may be off a day or two, but so far, and I think the reason why isn't because I'm that good, guys. I'm not. Like this is an expansive move. We're an expansive move, and folks that don't realize we're an early stage expansion, if that was the lens at which you're looking at this from, then the rest of this comes easy, because these are like 101 setups that are presenting us. This is not like I'm not doing something like this is a falling wedge flag. I mean, these things break out 60% of the time in uptrends, and that's what it did. You've got this ascending type of triangle, very common in Elliott wave bullish triangle patterns, and they break up a greater percentage of the time. And we've got this, this wedge now kind of flag developing. I mean, and so in expansive moves, in true expansive moves, bullish structures break out bullishly at a greater percentage of the time. So, it is what it is. I'm not doing anything that I think is all that special here, if I'm just being honest. And so that's how I'm viewing this. Next, let's go to if I'm wrong, because did I do that already? I did say that if I was wrong, then we can be looking at A, B, C into this cloud on the 4-hour, 42.4 prior to moving up and out of it. The destination would be the same. It would just take a few days longer. Okay. All right. Good. Next. It's a long video. Sorry. Next, Mara. And Mara, again, I've updated the Mara count. Okay. You all have seen this chart, me posting this chart since late August, I believe, late August. And for those that haven't been following me for that long, I was early on this move. I was early on calling this move. We got to be honest, and I try to always make myself better. This AB, I started accumulating miners in this ABC region starting in here. So I was early. But I don't care, because I'm looking to participate in this section of what I think the move is going to be. This section of what I think the move is going to be. And so accumulated all the way down into C. And I think we already made our 1-2, our minor 1-2 of this third impulse. I think that's in. I really do. And if we go back to the composition of 1-2 back in the fall of 2020. The one stopped here at the cloud that coincided with around the same time Bitcoin made its first miner one. And now we're just in price discovery. And it's not to say that we can't get a consolidation or a red week. We saw that in early December of 2020. And that's not to say that this is going to play out like I have illustrated, right? This is my belief. This is my opinion. No one knows what's going to happen. But my opinion is that, and I'm going to zoom in now, is that we are in this minor three wave. This minor three wave, and in this minor three, we've got 1, 2, 3. You know, it sounds aggressive, but these things can move really, really fast. And 98% of these gains happen very, very quickly in these names. And so, you know, this next move could take us to the 60, 70, 80 range early next year prior to any meaningful correction. And then I have this wave 3 targeted around 120, and then correction, and then this fifth wave somewhere above, you know, 200 to 317 range for the finale of this cycle for the miners. Early mid next year at the latest, but I really do have this fifth terminating at mid-March. So that's the updated count. I could be wrong, but I'm just giving you my honest opinion. My honest opinion is this is in local price discovery. And if let's just look at a couple things. Okay, this was the wave 1 top back in the summer, and if we truly are in a wave 3, then it wouldn't make a lot of sense from a structural and a momentum perspective for us to come out of this, stop at 24, and then correct. It just structurally wouldn't make a lot of sense in the context of these of a true 3 impulse, when I believe this 1 impulse came in to correction. It really would make a lot of sense for this thing to blow past that wave 1. Not to say that we couldn't get a little bit of consolidation in this area for a couple of weeks, right? And then resumption, but that's just the way, I'm interpreting it. We will see. MicroStrategy is very similar. And with MicroStrategy, what we have is a 1, 2, 3, 4 week consolidation. Okay, a 4-week consolidation in a bullish, you know, symmetrical triangle type setup. And this is the first week of the breakout. So in the first week of the breakout, as well as, let me take a wild guess. I bet you RSI breached 70 this week. And there it did. On the weekly, it breached 70. So we're just, and this is the first time this has happened since when? November of 2020, the last time it went on its massive impulsive run. So again, let me get rid of that. Let me pop this back up. This to me looks like the beginning of a major move. And I have this move terminating in the $2,000 range. That isn't to say that we can't get to $1,300, $1,400 and then consolidate for a couple of weeks prior to making that move. But that's just the way I'm reading it. Last chart is Riot against BTC. Okay, I get a lot of questions about miner performance. And I started posting this one months ago and saying this is Riot denominated in Bitcoin, okay? There's certain segments of the market where the miners have outperformed Bitcoin dramatically. Those segments of the market are, from a percentage standpoint, very, very small. So you have to be strategic, in my opinion, when you're looking at trying to outperform Bitcoin with miners. An example of that was July 2019. Okay, look at this. Look at how it bled against Bitcoin. Made this little inverse head and shoulders. And where was the place for your entry? It was here. back in November of 2020. That was the right shoulder, right? Made this right shoulder, and then it broke out. And it broke out for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks. And so where are we now? Well, we're in a very similar situation, right? It's not an inverse head and shoulders, but you have lower low, higher low against a trend line. And you had 1, 2, 3 touches, break out, and then it broke down on this trend line and stopped. It stopped at that critical trend line. What does that mean? It just means, in my mind, the probability is that the point we're at right here, where it touched that trend line in late October, was very similar to this reversal that we saw back in November 2020. And so far, we've had, and this goes for Mara, this goes for CleanSpark, we've had 1, 2, 3, 4, 5. All of these charts look very similar. 5 weeks of outperformance. Much like we saw 1, 2, 3, 4, 5 weeks of outperformance, and we saw 2 weeks of consolidation prior to resuming that run. We saw a week of consolidation here. So is it going to keep outperforming? I don't know. The charts are telling me we are in the early innings of this outperformance segment of the cycle. And so that's how I'm viewing that, folks. I hope that kind of cleared up my thoughts on the miners and where they are in relation to Bitcoin at this portion of the cycle. I hope you have a great rest of your weekend. I apologize. This is a long video, but I had a lot to say. Been a busy couple of weeks with travel. Take care. Enjoy the weekend. It's going to be a big week. I look forward to doing more of these.